Well, what just happened with jobs data? Because we just got a shock. As in, we were expecting to have relatively stable jobs data, and I don't know what it is, but other people are pointing this out as well. Last month, we have this big beat, and the jobs data, the job openings are great, everything's fine. Maybe it's seasonal hiring for FEMA work, or seasonal workers at Amazon, or, I don't know, poll workers, right? But now what do you have? Now they tell us that job openings were actually lower in August in the last report. We went down from 8.04 million openings down to 7.861. And then this report, which was supposed to come in at 8 million, comes in at just 7.443. Now the details of these reports matter as well. And you've even got Nick T tweeting about it. And let's just put it this way. He doesn't sound that optimistic about it. In fact, here you go. You can follow me on Twitter, by the way. I'm at RealMeatKevin, or as many of the Elon fans like to say, X. Well, everybody, I suppose, should say that because that's what he wants it to be called, but whatever. Also, there's this little note. Musk says there's a 10 to 20% chance that AI goes bad. Not sure why that's there, but whatever. We'll give it a like because I like that account. So, Nick T, whom I also like, so I'll give them a like. Job openings fell in September and were revised down for August, putting the 3-month moving average at its lowest level since the reopening in the spring of 2021. There were fewer than 1.1 posted job vacancies for every worker counted as unemployed in September. This is not great because look over here. What did you get into the plummet in the Great Recession over here? Job openings falling are very difficult to just stop. Like, once you start getting this collapse in job openings, it's very, very difficult to get it to recover. And the problem that you're facing is you're getting a lot of companies that are shrinking. Now, I want to go into the JOLTS reports in just a moment, and we can see some of this data a little bit more. Here, for example, is the 3-month moving average on these numbers. But I want you to just think for a moment. Look at what's going on with the consumer companies for a moment. I want you to look at SoFi. SoFi reports disappointing outlook for the future, next quarter and next year. What do you get? You're down 7.3%. McDonald's, home of affordability and E. coli, up because affordability is challenged. Crocs, flat revenue growth, down 18% today. People are so challenged on affordability that they're now buying smaller homes. Instead of buying homes, they're buying more attached townhouses. This is what D.R. Horton said in their report this morning. And they're buying homes that are a smaller square footage than ever before. As a result of that, what do you have? D.R. Horton stock, home builder stock. What do you got? Down 12.5%. Just got a notification as I'm filming this here. Somebody signed a bond agreement for $50,000 of an investment into HouseHack. Thank you so much for that. We'll take great care of you. If you don't know about that yet, go to househack.com. You can invest. You get 100% of the upside in the company, and you get paid a 5% yield. It's kind of like the offering that Tesla did in 2014 that did really well. They pay you a yield and you get upside, which is pretty awesome. Learn more about that at househack.com. But let's focus on this. I mean, the consumer is suffering to the point where even when you look at United Parcel Service, UPS, people are like, their revenues were so great at earnings, and the company actually jumped after earnings. But it bled right back out because when people started reading into the details, they're like, wait a minute, UPS is only doing well because they're squeezing out a little bit more efficiency. They're actually firing long-term workers. They think this holiday season will be more, quote, tempered than expected. And while the consumer is strong today, nobody knows how long it's going to last. See, we did have consumer confidence numbers that came out this morning, and they were fantastic. Well, no duh, the stock market's at all-time highs. Consumer confidence is one of the greatest lagging indicators. When the stock market goes up, consumer confidence goes up afterwards. It happens almost every single time. Just look at the charts. Well, when people lose their jobs, they stop praying for deflation because they start realizing that deflation leads to wage deflation. And so what do we actually have with the data? Well, look at the data. I'm going to take you into the tables because I like to go into the tables. I want to see the details. What do the details say? I always say the devil is in the details. Table number 7, still no indication in a major pickup of separations, like layoffs, right? But that's okay. I wouldn't expect that in a September JOLTS report, which is what this is anyway. I would expect that in January, not now. I expect layoffs in January, just like I expect Donald Trump's stock to continue to get halted as it's on its meteoric rise. Although today it's gone from like positive 20% to minus 2.8%, and now it's halted again. But that's really a topic for a different video. So what do you have over here? Job openings. Every category in seasonally adjusted job openings, folks. Every single category. Negative, 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 negative. Well, here's one flat. And then negative. So keep that in mind for a moment. The outlook for new hires, flat to negative, that is not an excellent outlook. And I want to clarify on SoFi. I should just mention that their forecast was for growth, but only 3.4% growth on SoFi. And that was deemed much weaker than the market had expected, because in this last quarter, they actually had a great beat. They beat by 12% on adjusted EBITDA. They beat by 8.6% on net revenue. But when you go from 8 to 12% beats to forecasting a 3% beat, markets start going, oh, where'd the growth go? It's kind of like with Crocs. You know, Crocs tells you flat going forward, not great. Growth forecast disappointed at PayPal as well. You know, where United States sales are going up is at McDonald's. McDonald's international sales missed this morning, but US sales were up because people are trading down to McDonald's. I hate to say it, but it's true. In fact, in recessions, McDonald's actually performs less bad than other stocks usually. But anyway, take a look at this. So you're negative to flat on every category on job openings. You still got some hiring going on, though some people wonder how much of this is, you know, seasonal. Again, this is supposed to be the seasonally adjusted report, but even the hiring is pretty flat. I mean, positive 1, negative 1, positive 3, positive 1, negative 1, positive 1, 0. These are pretty flat numbers on different sizes here, right? You're not really getting a massive separation yet. In the smaller companies you are, in the larger companies you're not. Okay, it roughly evens out, right? And then you're really not getting people quitting, which is very normal, because when people start getting nervous about their ability to get a new job, people stop quitting. You're at the lowest levels of quits compared to August or last year. You're at the lowest levels of quits. Normal. If you go to the non-seasonally adjusted figures, so we go from seasonally adjusted to non-seasonally adjusted, all categories for job openings are down with the exception of one. You have 1,000 to 5,000 employees positive, but outside of that, negative 0.2, negative 0.8, negative 1, negative 1, negative 1, positive 4, negative 4. So this is overwhelmingly negative. Again, the quits rate is falling, signaling less confidence in job place, and you have lower separations, which is normal. But folks, once this layoff cycle begins, it doesn't end, and I think it's probably coming January or February. I think you've got one last little hoorah where companies are like, yeah, we squeezed some margins. Yeah, we beat on Q3 and Q4. Yeah, holiday season. Yeah, let's keep our workers. What happens in January? In January, people start saying, that's it, we're cutting. Guess what Starbucks is doing? Starbucks come January, if you're not back to work in the office, you're fired for their corporate staff. That's the kind of stuff that's going to keep happening. It's going to get worse in January. I think the worst of the jobs reports aren't coming now during the holiday season. They come when people are truly out of monies and the dollar hollers in January and February. It's not great. This is why we're raising cash with HouseHack, because, you know, if we get a lot of deals in real estate next year, we want to be the ones shopping. So anyway, you can learn more about that over at househack.com. If you want to learn how to buy houses yourself as well, you could go to meetkevin.com and learn all about it. We got a sale going for another couple days over there. But let's analyze for a moment the JOLTS job openings, and let's just take a look for a moment at the historical job openings level. I hope they've already updated this, which is fantastic. So this is just a historical chart on the St. Louis Fed. Unfortunately, they started this over here in 2001, but even in 2001, 2000, you could see this peaked out. The recession began in March, and you get a downturn associated with a recession. Just like you had a downturn in the JOLTS associated with the recession in 2008. Oh, but maybe this time is different. You know, you could also go to the quits levels here. Let's see, construction. Oh, let's look at construction for a moment. Let's look at construction. Yeah, it drops again a little bit. Not a surprise. You really probably have to smooth this out. So if I go with the quarterly reads, quarterly doesn't look too good. Usually that's a recessionary indicator. D.R. Horton also this morning mentioned that they have shorter lead times now in the building of new homes, which, you know, is an indicator that construction is becoming a little bit more available. Not great either. And then the quits rate is usually something we watch as well, just as a tell that when times get harder in an economy, people are less confident about their jobs, they quit less frequently. And you can look right now, the quits rate is at 1.9, which is actually as low as what we saw in about 2002 and 2003. It was not this low in 2005 and 6, hit it again in the recession, and after the recession, we were even lower. But you didn't see this in 2016, 17, 18, you know, post-pandemic. Obviously, during the pandemic there, you had some quits. So I don't know if it's necessarily like horrible data, I wouldn't say. I don't think the data is horrible at all, but it is a red flag that some of the data that we got in September, in September for August, might end up getting revised down substantially. And we've got a lot more jobs data coming. Not only do we have earnings this week that we're going to be paying attention to, but we're going to be paying attention to the ADP private jobs report tomorrow, unemployment claims and the Challenger report on Thursday, jobs report on Friday morning. I'll be covering it all. And then, of course, today in the afternoon, I'll be live for this as well. We'll have a market closing live stream on the Market Live channel. AMD, Google, Snap, Chipotle, First Solar, Visa, and EA. As always, if you have questions about investing in HouseHack, where you get that 5% yield and all of the upside in the stock. So it's different than just having like a treasury bond, right? It's all the upside in the stock and a yield. Learn more about that over at househack.com. And if you have questions, you can always email us at ir@househack.com. If you have questions on the courses on building wealth, email us over at staff@meetkevin.com. And if you want personalized financial advice from myself and the team, no advice goes out the door without going through me. I was working with my team on clients yesterday while we were in flight to some HouseHack properties. Go to stockhack.com. Book an intro call. It's totally free to book an intro call, and we could talk to you to see if the service is right for you, and if you have any concerns with the service, you could ask for it. But the goal for us is to not just like work with you for 2 weeks and then forget about you forever. It's to actually constantly be your financial coach. We actually call it your financial agent. I think it's the easiest way to look at it. It's a very, very different service than what people are used to. It's really just working with you over the long term to build your wealth. So we're really excited about it. Learn about that over at stockhack.com. So anyway, folks, thanks so much for being here. We will see you all in the next one. And DJT, let's do a quick little final check on DJ Tizzle. DJ Tizzle is sitting. Oh, where'd it go? It's suspended. Oh, that's why I couldn't find it. Suspended at about 47.28 right now, so we'll see where it goes. All right, folks, we'll see you in the next one. Thanks so much. Goodbye. Good luck. We'll see you in the next live.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.